Good afternoon, everyone, and a very warm welcome to our webinar on a very interesting topic today, from pockets to portfolios, CEO's personal money management journey. My name is Tina Raval, Regional Head for West and South at FPSB India, and your host for today's session. And I'm thrilled to have you all here with us. As the topic entails, from pockets to portfolios, CEO's personal money management journey is a topic that explores the financial. I'm sorry, is there an
Yeah.
echo? All right, thank you so much. Pardon everyone for the inconvenience. As we were talking about the topic, that it entails that explores the financial experiences and strategies of top executives in managing their personal wealth. CEOs often face unique financial challenges due to high profile positions and substantial incomes. Despite their professional success, they may encounter difficulties in managing personal finance effectively, including tax optimization, investment decisions, estate planning, balancing risks, and so on. Ever wonder how do they deal with such challenges? Let's find out together in today's session. But before we do that, I would like to take a moment to introduce our esteemed panel of guests who would be sharing their insights and experiences with us today. We have Mr. Ashok Kumar Gautam, the Managing Director and CEO of India International Bullion Exchange IFSC Limited at Gift City. Mr. Gautam joined IIBX in his present leadership role in February 2022 and is credited with introducing some of the global first initiatives at IIBX. With over 38 years of experience in various facets of banking and financial management, such as treasury, bullion, financial institutions, transaction banking, and more, Mr. Gautam brings a wealth of knowledge and expertise to our discussion today. Joining Mr. Gautam, we also have the esteemed Mr. Arun Thukral, CFP, PPAC Chairman of FPSB India. Mr. Thukral is also a professor of practice with KJ Somaiya Institute of Management, angel investor, and the former MD and CEO of Axis Securities. He is also the author of the insightful book Yogi on Dalal Street. With his extensive experience in the financial industry and his commitment to financial planning excellence, Mr. Thukral adds a unique perspective to our panel. We're truly honored to have such distinguished individuals joining us to shed light on this important topic. Now, before we start, let's go over a few housekeeping rules to ensure that everyone has a smooth and enjoyable experience throughout the webinar. Please keep your microphones unmuted throughout the session to minimize the background noise. If you have any questions for our panelists, feel free to type them in the chat box. We will have a dedicated Q&A session at the end where we will address as many questions as time permits. We encourage you to engage with us on social media platforms to keep updated on our recent initiatives and progresses. Your feedback is important. Therefore, please share your key takeaways and insights from today's discussion with us. To all the CFP professionals, this video will be recorded and uploaded on the LMS portal, featuring special questions directly from this webinar. Access the quiz on your portal and attempt the questions and earn your well-deserved CPD points. With that, let's start the session. Our panelists will delve into their personal money management journey, offering valuable insights and practical tips that you can apply onto your own financial goals. With that, I would like to invite you, Arun, to take the discussion forward, please.
Thank you, Tina, for a great introduction. And thank you, Ashok, for accepting our invite to be with us on a Sunday, and in spite of your hectic schedule. So I think before I should ask a very simple question. How is life treating you?
Yes. So Arun, as you know, and thanks Tina for the amazing introduction. And I must also thank FPSB India for arranging this seminar, and Arun for thinking of me for this particular session. I would say, we all have to be grateful to this life, whatever life has been given to us. And you just can't complain. You just have to do your duty. You just have to, take challenges heads on, and also whatever opportunities God gives you, do your best, and that's how the life is to be lived.
Thank you. Great. So, Ashok, as you know, the topic today is about the money management journey of CEOs. So, we would be primarily talking to you about your journey. So, before you get into your money making journey or money management journey, you should start a little bit about your early career and your relationship with money at that time, and what you were doing at that time about saving or investing and all that.
I don't know. I mean, and this, in fact, this is the first time on a public platform, somebody has asked me this question, and happy to share. As you know, we grew up in a time when I don't know, this current generation probably has not seen, and it's just very good. And India has come a long way, and that was a time when our parents will actually ask us to stand in the queue of ration shops, and you will be standing in the queue, and the the whatever. Even at the time, sometimes you had to take the wheat, sugar, milk, as per whatever quota you have, and through the ration card, you'll stand in the queue, and but then the point was that you you were always wanting to do something with the life, and you studied well, and you grabbed the opportunities which came along the way. I started much early, and I was fortunate that in those days, the Sri Ram Group, which is a Usha brand name, which is a Usha Sri Ram Group, Lala Charat Ram's group in those days, they used to run a program of they will pick up the first class graduates from various universities, and they will hire them as commercial officer trainees for posting in their various institutions, factories or head offices. So I was picked up in one of those. I saw the ad, I applied, and that's how I landed in Agra. That's a J Ring Works, which was a factory for Usha fans. And there I was a commercial officer trainee. I was put into materials management in those days. And that is, I think, have taken me back to January 1983. People will find it, I'm quite archaic, but that's where the work journey started. And it was an amazing experience, learning everything hands-on on the shop floor, interacting with other colleagues from, and seeing the factory for the first time, the production line for fans, and as luck would have it, it fell upon me because my boss had fallen ill, to become actually in charge of that whole materials management department at that tender age. And I was lucky to be mentored by some of the industry's best people who were there, and even the executive director at that time, Mr. R.K. Jain. And you will be surprised to know that Mr. Alok B. Sri Ram, he was my boss for some time, and now he's a well-known industrialist. And that's where they all guided me, mentored me. I learned everything hands-on, and then I had applied for National Thermal Power Corporation in those days as executive trainee finance. I got selected, again, one of the youngest, the second batch, which was 1984. I worked there. They had this executive MBA program, which was in-house. So they will give you 1 year classroom training and 1 year on the job training. So 6 months classroom, 6 months on the job, 6 months classroom, 6 months on the job. So after first 6 months in Delhi, their Management Development Institute in near Nehru Place, I was posted in Singrauli plant. I mean, it was a massive in those days. India having that 500 megawatt thermal plant, and it was really amazing for me to find myself in the midst of that. Worked there for 11 months. Then found that my passion probably lied in finance and banking because NTPC has triggered it. So I joined State Bank of India in 1985. So 22 years with State Bank of India, amazing institution, gave me exposure to varied fields. Sort of got a chance to specialize in treasury area. Uh, was in treasury from the year 1998 onwards. Headed regional treasury in Delhi, then treasury in Singapore. I was lucky to be chosen to set up the Central Treasury of Hong Kong, which covered all the branches from Malé to Sydney. That whole region was with us. And then the next calling came when Axis Bank asked me to join them. I weighed. It was a very difficult decision for me to move out of State Bank of India. But I took up the challenge and I joined their treasury in Mumbai. I did the forex trading. Then bullion was part of our. It was just starting, and so forex trading, bullion, and slowly I started getting opportunities. The bosses were kind. They gave me more opportunities. I became head of global markets. Got the got to be the part of the transaction banking team, which was set up. Then the corporate side transaction banking team was with us. And towards the last 3 years of Axis Bank tenure, I was asked to I was asked to head the financial institutions group, FIG as they call, and that gave me amazing opportunity to interact with the global banks, multilateral agencies, visit all over the world, and really phenomenal assignments in Axis Bank. I am so thankful to Axis Bank for all the opportunities. And then the calling came from IIBX Bank, where they were looking to hire an executive director who want to head their treasury. I was selected, and I thought, I must take up this new challenge because it was going through a transition. It had just become a private sector bank where LIC had then come in and invested, and they were able to hire executive laterally. So I was selected, got in. Amazing 2.5 year journey, and could do during those were tough times, and could really, the COVID also was there, and managing finances of that bank of that stature. That was an amazing opportunity I got. It so happened that Finance Minister of India had announced setting up of a international bullion exchange in Gift City, Gandhinagar, in her budget speech. And then IFSCA came into being. IFSCA is International Financial Services Centers Authority, the regulator at GIFT IFSC, and they released regulations for the bullion exchange. And then the promoters, BSE, NSE, MCX, NSDL, CDSL, they formed a holding company called IIBX, and they were looking to hire an MD. So the search committee reached out, and I applied, and then I took the plunge. I thought I must take this opportunity to set up a very unique institution, and which should be catalyst to provide India its deserved space in the bullion space, particularly the gold in the global financial market. So that's where I am in front of you, Arun, and thank you for being an amazing colleague at Axis. And here we are.
Pleasure is all mine, Ashok. I think great journey. I think you have summed it beautifully, and starting and reminding me of that ration shops, and then setting up something at Hong Kong, coming back, doing so many great things. Now, a little bit about your money management thing. So early career, what was your relationship with money? So now we talk about asset allocation. And then there were events in your life. You got married, you had kids, whatever. So a different event, whether it changed, whether you bought an insurance at what time, or get into a serious money management thoughts when it came, and how it has evolved. I think a little bit about that, if you can take us through. Yeah.
Yeah, Arun, as you know, in the initial phase and those days, you are also aware. I mean, when I'm talking about the 80s, early 80s, mid 80s, and then so in those days, the salary levels used to be, decent, but they were not, very high. Considering the kind of salary people get it today. And those days, essentially, probably the only instrument which we were looking was the fixed deposit. or maybe some kind of a recurring deposit if you have some surplus money. And of course, that was a time when you had to take care of your family, and you were also uh, trying to ensure that your family gets a decent living. And and then there are other family responsibilities during that time at which you are. So essentially, you are not at that time thinking of yourself as such. That was a time when you are looking for your family, and you decide that yes, you have to do for the family so that your sister, they get good education, your mother takes and she's taken care of. And then probably the marriage comes a little later. And but then of course, with the time, the marriage also happens. And I sometimes in those days, other investment opportunities used to be, government will have various schemes where you will, if you invest a particular amount in national saving certificates, then you will get some benefit in your tax rebate. So in fact, the investment was driven by the tax incentives which were available, and probably because your own money kitty was very small, and whatever you could do to smartly invest in some of the opportunities which government actually was guiding by tax incentives, long term savings plan and all. And so that was happening. And insurance also, as one got married, so you also thought of insurance. But those, again, now I look at the hindsight, those insurance were actually very, very small. I now probably sometimes laugh, at that time it looked to be very big insurance amount, but as things went on, probably Arun, I think the this whole financial planning thing probably was never taught to us, or and that's what I still believe when I go to various colleges, institutes to give lecture. And that's one thing which I always emphasize, that in the curriculum it is very important now. I mean, it was always there, but we were never exposed to that. This whole financial planning should be part of the curriculum so that you learn it rather than by accident, but by design, and you equip yourself more and more financially. So then I got exposed to the global practices. In '89, I was sent to Hong Kong by State Bank of India. Then you find, oh wow, the world is entirely different. And that's where you suddenly come back and you start looking at money. And then so in those days, the question whether to get into stocks at that stage, in those days, as you know, there were a lot of things were happening. And the students of finance would know that those days some of the murkier scams took place, and people were actually getting put off. The what we call aam aadmi, the middle class people like us, they were little uncomfortable in getting into the stock market in those days. But as the SEBI came in and a lot of regulations came in, and you started gaining confidence, and that's how the stock started becoming part of your portfolio. And slowly, you needed money for your kids' education and setting up the house. And slowly, with whatever surplus you had, you started diversifying your portfolio. Now, there's a key word now we all talk about, and asset allocation. In those days, we were not thinking in those terms. We were thinking of, whatever opportunities which we could think of. At the time, the security was paramount. Is our money secure? And then we were thinking that whatever, sometimes I don't know, people have not, in those days, sometimes we have seen those interest rates of 12%, 14%, and all that also earlier. So would you like to lock in at that time, whatever 5-year or 7-year or 8-year deposits you could put in? And some of the government schemes where you could, they were always offering very good returns. In those days, in 5-year in NSC, the money used to get double. So those were some of the avenues. But slowly you started having stock investments, allocations. And then came that boom of, if I may say, 2000s and all, when a lot of new banks were coming in. The IT companies, IT sector came in, and then this concept of ESOP came in, and where employers started rewarding or incentivizing, or as a part of your overall package. ESOP was very much part of that. And then you realize that yes, if you work hard, you get recognized and rewarded by the management. Then obviously this is one thing which will really take you through, because by nature it was spread over a period of time, and it really gave you incentive. And once uh, it came to you, and then you could really decide in which third year, depending upon whether first year, second year, third year, fourth year, fifth year, how the ESOPs are given, when you should actually, when you need money, or you need some more opportunity, you find some more investment opportunities. So at that time you exercise it and you encash it. Or sometimes you just don't do anything, you keep it in your portfolio and you just let it be. So this is how things happen. And along the way, the time came when you thought, yes, you must invest in a house. Of course, you need a house to stay. But then there is always a in a city like Mumbai, whether it's advisable to just stay in a rented accommodation, because of the property prices, whichever grade you are, you always find the property prices are little beyond you. But that's where you take a decision. Yes, now you know how much you should take loan, how much is your own savings, and how do you think that over a period of time, next 15, 20, or 30 years, you'll be able to repay. Does it make sense to you? So this is how a typical middle class uh, boy's journey to wherever we are right now. Uh, and finance as such always played a very important role. I mean, that's why we started working. And but one thing which Arun, I understood it very early, that uh, the money or the finance play a very major role in your life, and you just cannot take it very flippantly. Okay, and you have to be very uh, conscious of what you're earning, where your money is going, how you are investing, and what type of returns you are expecting. And always you should have some kind of a mix and match approach, you know, something which is in real estate, which is your house, or maybe if you want to invest into real estate, then you know you just is not liquid enough, you just can't take the money out immediately. Then you should always have a portion which is in liquid cash, you know, and available for your running expenses or maybe some eventualities which might come. And of course, then there are fixed income investments, stocks, and as you go now, more and more opportunities are coming, and we can discuss as we go.
I think again, I am also reliving those moments because you reminded me, yeah, there were very, very high interest rates in the early 2000, and we used to get around 12% in our FD, and we used to open RD, recurring deposit, so that we knew the interest rates would come down. So better to lock into an RD. And that journey, I remember those days. And yes, over a period of time, the equity love has come. Now, that time people were afraid, people were worried, and all this happened in 2008, 9, markets crashed. And the kind of demat account we had, even mutual fund industry was growing. Now we have a 50 lakh crore industry, and we have $2 billion of SIP every month. But those days, yeah, everybody was worried and apprehensive. And you talked about your journey at Axis Bank, and you were heading bullion. So I think your love for bullion started that time, and it would be great if you tell us about the gold investment and in what form and how to do and what part of portfolio should be gold, because that is your expertise, that is your domain. So maybe I would like you to talk a little bit about that.
Arun, I think it's not the time when I headed Axis Bank's forex trading, and the bullion was part of my portfolio. I think gold has always been traditionally. I mean, India was called Sone ki Chidiya, not for nothing, because and as per the World Gold Council estimates, Indians, you know, they hold 25,000 tons of gold. You know, you can imagine the kind of gold, and I believe that number would be still higher, and that is available with the various religious trusts, temples, wealthy individuals in various lockers in the form of jewelry. But I mean, you will be surprised to know, I'm sure you know, but your audience will be surprised to know that in the village area, in the smaller towns, still the investment of choice is gold. And I would say that the housewives are the smartest investors. because any portion of their savings, whether you would, as a husband or as a father or as a brother, you would come to know or not, but they would be, buying small gold pieces, across during their whole lifetime, and many times it actually comes as a savior for the family. When the family sometimes falls into distress, then gold is something which you can immediately encash. It's just as good as money. And moreover, in times of migrations, there are wars, there are famines, and this is part of the human history. And so the only asset which you can immediately carry, which will be of value, is gold. Let's look at before we gained independence, and there will be British rule, and before that various kingdoms will be there. So one thing, apart from your own knowledge, which will have value in any kingdom you go, another thing which if you go with the gold to any kingdom, though, you will be welcome, and but you can't, you couldn't take your land anywhere, or you couldn't take your other things anywhere. I'm taking you a little bit back to the history, and that's how everything started, and that's how this fascination with the gold started. I mean, if you have the gold, it doesn't get rusted. Nothing happens to it, I'm sure many of your audience, if they talk to their parents, and they will know they have from generations some gold item has been passed on. You might go and change get into a new design and all, but so gold was always there with our family. And I know when our father was uh, trying to construct his own house, small house, probably the one thing which helped was my mother's jewelry also, which came at that time. So whatever little pieces were there, and that always happens. So I realized that, and let's look at some of the tough times. And remember, in those days when we'll go to cinemas, and there will be a news documentary, which will always be mandatorily shown before the cinemas. And I've seen those, visuals where during the 62 war with China, we have our political leaders on the road where they are asking the women folk to donate gold, so that some money can be generated for the war efforts. And let's now come back to 1991, and the kind of gold reserves, whatever little we were having. India had to ship their gold to the Bank of England, where it was kept as a security, where they could secure some hard currency loan to meet the requirement. Let's now come back to COVID times. And during COVID times, as you know, Reserve Bank of India had increased the loan to value ratio to 85% on the gold metal loans. I mean, not gold metal loans, gold loans. And that's where when the people in the villages, the people who were having their small businesses, SSIs, they actually took out that gold, came to the banks, came to the financial institutions, took loan against it, and to survive those tough times. So I mean, gold probably, in my view, should always be part of your portfolio. How much it is, it's best left to your own asset allocation. But I would still say around 9 to 10% of your portfolio must have gold. But gold in which form? Now you have so many forms of the gold investment which is there. So you can buy physical gold, there are gold bars, jewelry, of course. And it is a very interesting point which I keep making to everyone. Though now, women actually are earning as well, and sometimes better than their spouses, which is a very welcome thing. But I would still say, whenever the husbands will buy gold jewelry for their wives, or the wives will ask them to buy. So I always make this point, so it's a current account transaction as far as the wife is concerned, because she likes to wear it, and for her it's a consumption. I mean, you can't consume it in that sense, but but for the husband, it's smartly they would know this is a capital account transaction because it's an asset in the house, even though it's an expense in that moment. So it works both ways, and so I'm sure the husbands who are actually buying for their spouses gold, they're doing the smart thing. Their spouses are happy, and they are building an asset for the family. But now then, ETF started, exchange traded funds launched by various mutual funds. They are also sizable. And then Government of India came up with an amazing instrument called sovereign gold bond. And I would encourage any serious investor in gold must look at this, because this is the only gold bond where actually you get an interest rate. They give you an interest rate, and because we have seen the gold price going up, and also because it's an international price, it's actually USD, it's quoted in USD globally. So you are actually also taking an exposure on an international, if I can use that asset, which is in US dollar. And so if the US dollar, I mean, the gold value goes up, USD value goes down, you get double benefit. So sovereign gold bond, you get interest, you get other benefits. So it's an amazing instrument which Government of India has launched, and you must look at it. So take your pick. There is a ample suites of products on in the, as far as the gold is concerned, it's available. And not only gold, other precious metals also, silver is there, and uh, so it should be part of your portfolio.
Great. I think great information. And I also remember very clearly that this current account, capital account transaction is a great thing what you told. I think people should remember that, because both the spouses, both the partner think that they are smarter. The wife is getting gold because she thinks that, okay, she's getting some money and she's getting some jewelry and she will be wearing that. And the husband is thinking, okay, my gold assets have gone up. So that is great. And this sovereign gold bond, again, there are a lot of benefit, as you said. Even there's a tax benefit also. After 8 years, there is no capital gain tax. So this is again a great this thing. Because I used to buy coins, and at some point, if she wanted a necklace, so I said, let us buy a coin. She said, I can't put that in my neck. So at least buy a necklace. And then the coin thing has shifted to that SGB, and suddenly the gold becomes an income producing asset for us. So I think that's a great journey, and that's a great facility now the government is giving, that they are paying interest. Okay, so now the things have changed. Now you see all around there's a lot of digital interface. There's a lot of tech. There's a lot of tech platforms, and you can invest into any asset class. And so, how comfortable or how easy it is for you to get into this tech platform and invest? And a little bit on risk management in your overall things. And finally, the role of personal advisor or the certified financial professional, because our audience today is the financial planning students and financial planners, because both has a role. So what is your take on this?
So Arun, if you allow me, I'll flip it. The point which you made last, and I would say that is something which I wish I had financial planners with me, and they were guiding me in my journey. Because we were learning by, lot of things were hits and misses, and uh, you will be lucky in some of the investments, and then you wouldn't even know many of the opportunities which are available. So this whole piece of certified financial planner is something which amazes me, and I would also encourage your institute to also have tie-ups across with the various institutes, management institutes, and various even institutions where because many of the corporates, they have this plan where they encourage their employees to have online education. So you can have that tie-up with them so that your courses are available to them online, as well as there is a physical interface, because I believe that the certified financial planning thing which your institute is spearheading, not only in India but globally, and so this is extremely important at this phase, this point of time. And now that India is just poised for tremendous growth. I always believed in India. I always was bullish, am bullish, will remain bullish on India, because the kind of demography which we have, the kind of enterprise which we have, there is no denying that India will remain the story for the next 50 to 100 years. And along with that also comes the critical role how the financial planning is very seriously taken in. So obviously, what I say that digital interfaces and all are for convenience of execution, entry and exit, and but what to do and when to do. For that, you need financial planners. So that's where I don't want to spill the beans, but you have been a financial planner for me in some of our conversations where I have taken your advice. But there is a requirement for a very formal way. People should look at like you have your chartered accountants and a company has a company secretary. So the individuals and whichever phase of their life or where journey they are, the sooner they have a financial planner, it's better. And so that you get a perspective, because you are not trained for everything. And the financial planners are trained to, give you guidance. And so I wish I had this something with me 30 years back. Probably I would have been at a different uh, phase of my, financial planning piece. But now coming to the digital point which you asked, so digital is amazing. Like today, well, if you want to invest in ETFs, you want to invest in any stocks, everything is digitally available to you. Even if you want to invest in gold or silver, there are many platforms which are there, but you have to be also very mindful of where you're getting in. That's where you have to be very careful. Are they regulated or are they unregulated? People promise you a moon. Please don't fall for any of these promises. Be very careful if somebody uh, uh, tells you that something can happen in a day or two. It doesn't happen. It has never happened. It will never happen. You might be some plain lucky at that point of time. Don't think that luck can be equated with smartness. I mean, people generally get lucky during the investment journey, and then they say, "No, we are so smart." But it's always have a go slow, go steady, but steady is the key. You have to be at it, and you have to keep weighing your options. Where you are. And that leads me to the next point, which is the risk management you mentioned, and that's extremely important. And anything you are doing, any asset you want to get in, any asset class you want to invest, you should be very mindful of what could go wrong. You may still take a plunge, you may still decide to go ahead, but you should not find that there is a risk along the way. You should be evaluating that risk before that you get into that investment piece, or that asset which you are buying, or even that asset which you are exiting. So you should know. And along with that, it's very important that you must understand the tax implications of whatever you are doing, because many times people don't understand or they don't even think about it. I mean, I'm sure they understand it, but they don't think about it when they are entering into an asset class and exiting an asset class. And the ease of transactions. And apart from that, one must also look at the cost of transactions. The cost of transactions on the real estate could be very high. So you must understand, if you think that you are having a real estate and you want to treat it as a liquid asset, it's not going to happen. Because the day you want to exit out of it, then you will realize, what is the cost of transaction. There are brokerages, there are government taxes, there is a wealth tax, and so many other things which kick in. And all this you should weigh when you are making any decision. So that's where Arun, I would say that a very important role of a financial planner. You must engage a good financial planner, have a conversation. You must always tell what are your goals, and then you seek the views, and then you say, how we must plan at various stages of our lives. Today, there are a lot of digital platforms which, because of the big data, they look at your profile and then they throw various investment advisors at your end. And I know, when banks are also investing in creating those digital advisory platforms by use of the big data, because they have access to so many of your transactions. But I still believe it's very important for you to have a conversation with your financial planner, so that you are very clear what you are trying to get in. Otherwise, you will be just bombarded by do this, do this, do this, do this. So Arun, this is what I think is my take. I don't know if I have answered your question fully or the way you wanted it.
No, you have answered it beautifully and summed it up also for us. And a little bit on your personal choices. So nowadays there are a lot of options. So you have PMSs, you have small cases, you have cryptocurrencies, you have so many things. So I think there are investors who love these asset classes, or they are somewhere in between that they will go up to PMS but not get into cryptocurrencies. Or somebody would just plain simple equity mutual fund will buy and maybe a little bit of gold, little bit of real estate, or maybe in a different form like a REIT and all. So what is your personal style, and what is your view on that? And there is a question on cryptocurrency which I can see, because that is what I think every youngsters mostly or new age investor, they love this. So any view on that specifically?
So Arun, I'll answer it in a different way. So I would say that each individual is different. Everybody's needs are different, everybody's desires are different, and everybody's goals are different. So your investment journey should reflect it. And that's what is my take on anybody wants an advice. Or so I say, the only advice which I give you, I can lay down the options before you, and what is needed, what are the risks, what are the challenges, and then it has to be your call, because everybody has to own that decision themselves. Even if you have a financial planner, but ultimately it has to be your own decision, and you have to take that call. But there are a number of ways, like you mentioned about real estate. So REIT is, of course, very good in, if I say, all these financial innovations and the products which have come into market. There are various ways, and you can also look at whether you are only looking at a rental income side of that kind of investment. You are looking at the appreciation, and is it targeted only towards the commercial space? It is also targeted towards the office residential space. There are various permutations and combinations. People can always give you a product. They can also design product for you or a group of investors if that is what is needed. And there are funds, very big funds, and globally there are some of the big names. They control large assets across the globe. But now let me come to this piece of cryptocurrency. So there I always go to what the great sage of Omaha, Warren Buffett says, and that's what. So wherever you are investing, you must understand a bit of it. So just don't do. I don't. I can use that term bhed chal. Don't do because your friend is doing, or don't do because your boss is doing, and don't do because your colleague who is suddenly having a fancy car is doing it. So you do it only when you understand it, and you understand its pitfalls. You understand, does it really makes sense to you? And also in various real, you have to also understand in your given structure, is it legal? So these things are very important to understand, because you might get into something which may not be fully legal. You have to understand that. So my take on cryptocurrency or the crypto assets is that the jury is still out, and the kind of volatility which it has seen, and if you see the Bitcoin chart and all, and amazing volatility. But I mean, are you into a speculative piece or are you into serious investment piece? It's your call. You have to take it with that assessment. I won't get into anything which I don't understand. I might lose out on many of the investment opportunities, which is fine with me. I might lose on an investment, but knowing fully well that I had understood it, but I got into the wrong time. I miscalculated it, or there were some of the things, or maybe on the real estate, sometimes you get into frauds. You get into a builder, you give the money, and you are victim to a fraud. I mean, that is something else. But you must get into anything which you please study about it. If you really want to get into cryptocurrency, please study in and out about it. You must understand, and then you see is it good enough to be part of your portfolio? If it is good enough to be part of your portfolio, what percentage of that portfolio are you committed to? Because you could actually lose everything also. Because right now there is this debate going on whether it will replace the fiat currency or not. Though I think those conversations we have seen for the last so many years. Let's not get into that. But I thought this is what I want to give an advice along with the caution.
So one question which people ask, and they used to ask me when I was a CEO, that how you get the time, because the way and the busy you are, because I was talking to you yesterday, you were somewhere else day before, and how it's like running a company where you deal in thousands of crores and then also take care of your smaller portfolio. How do you find time, and how do you get time to do all that? And so any similarities running a company and running your own small portfolio? Is there any similarity, or is it different, or how you handle this? Because when I was CEO, everybody used to ask me, how do you get the time? Yeah. Tell
I
me,
don't.
what
I
is
tell
your
you,
take?
you can be casual about your own, finances. You just cannot be casual about your company finances. You have to be 100 times extra careful. There's a huge due diligence processes there. There are checks and balances. There is a board you are answerable to. There are various board committees, and you have your CFOs and the top management who works with you on various investment decisions and various commitments of money for whatever you are trying to do. And so I would say these two are entirely different things, and that's what I say on your job. It's a order of 100 to 1,000 times more. You have to be diligent, cautious. Of course, you will take decisions which sometimes will go wrong, but that's part of the responsibilities which you shoulder, and that's your call. You sometimes it's your call, even though there is a committee and all, you take that call. But you have to be.
Yeah. Yes, you have for your personal need, either have a financial planner or a friend who has been a financial planner.
Yes. I mean,
just
and
to
like I know
just
you
to
have
tell
been
it.
for.
Yeah. So I
Yeah.
think that is also important, because you can't ignore that also.
You
Because
cannot ignore it.
one has to be unapologetic in managing his own money, because you have earned it and you should invest it. I think you have to balance that. I think you agree, Ashok. Yeah.
I'm actually with you. So I was coming to the second point is that,
Yeah.
you must have a financial planner who is also guiding you. And earlier, we remember your chartered accountant who will help you in filing your income tax return will be your sort of a financial planner. But now it has become a specialized field. And that's where, friends like you come in, and we also, and I reached out to you a number of times seeking your advice, because I myself am not very clear or don't have even time to even think about it. That's where you look at specialized people and you take their advice for your own financial. But let me also tell you, people get swayed by what family tells. People get swayed by friends tell, the influencers. Now this whole influencer piece on Instagram Reels and Facebook Reels and whatnot you have. So be very careful, getting influenced by these kind of advices. Always be very clear, and reach out to people. You will be able to know, you will be able to separate wheat from the chaff, and stick with the wheat or whatever is your fancy millet diet. Stick with them and keep taking their advice. Go back to them. And if your goals have changed, your destination journey has changed, go back to them and you say, do I need to rejig? Do I need to change it? Now my goals have changed. This is now what I want to do. And what should I do? So this is extremely important. But both things will continue, and they will all pressing each other. You may have to find a balance.
So time for some questions now, Ashok. And I think Tina, you want to help, or if anyone wants to ask how we should do it. Tina?
Thank you. Thank you so much, Arun. And thank you, Ashok, for guiding us through the intricacies of financial management and sharing insights into wise investments and illuminating shift trends in investment behavior and so on, such as enduring popularity of gold among housewives. your candid discussion, both successful and unsuccessful investment ventures, as well as the significance of engaging with a certified financial planner or taking advice has undoubtedly helped our audience's understanding. We sincerely appreciate your willingness to impart your life experiences, and I'm confident that our audience has gained, invaluable knowledge from your expertise. So thank you once again. And yes, Arun, we indeed have got a few questions. We have shortlisted a few of them, considering the time that we have left at hand. The first question talks about, and thank you for asking this question, that as a parent, how easy or difficult it is for you to influence your children about money management and saving habits. This is a question even I would like to hear an answer to.
Ashok, you have to.
Okay, so essentially, as a parent, now what I know, I have, you know, daughter and a son, and son is now 22 or so, and daughter little elder than him. So, what I tell you as a parent that you can only demonstrate them by your own conduct. How they see you, how the upbringing they see in the house, your own conduct, how careful you are with the money and how you choose widely the options. So when you are going out with them, when you are buying something, how you do that process, and so they learn from you. They learn in the families, and so I interact with a lot of business families, and now last 2 years have been interacting with a lot of jewelry houses and jewelers and people who do deal in bullion. And that's where I see the next generation is always learning from the previous generation. So your own conduct as a parent, that's very important. And of course, many times you try to tell them, but trust me, at some stage, the children have their own mind. So you can only guide them up to a level. After that, they take their own decisions. But still, I believe that in the financial matters, they always reach out to their parents. They take their advice, what is to be done. Of course, they have their friends and they have their colleagues who guide them. And it's extremely important that we encourage an open discussion about finances. Many times we ourselves are very cagey about discussing, and particularly we are very cagey in talking about our failures, and missteps which we have taken in our life. So we have to also share those so that they learn from our mistakes. So it's extremely important that we share both the up and we share our journey of ups and downs, because it's always there. There is never a simple trajectory, and that's where the kids or the children have to learn from their parents. But trust me, they are smarter than us. So many times I just leave it to them to take their own calls.
Right. Thank you so much. I think that was indeed very helpful. There is another question that talks about, I want to take the advice from an advisor, but how to make sure that the advisor is good in terms of knowledge? Ashok, yeah, Arun, anyone would like to take that question?
Let Ashok start. I would add something.
Yeah. I was just going to say that I will, lead this to Arun.
Okay. So let me because this question I got many times. So I have a very simple answer. That how do you get a doctor? How do you find a doctor? You will ask friends. Then you will sometime go. There is a long list of patients. There are patients who are waiting, and there is other doctor who is sitting idle. So you will get some references. You will try and then go and meet the doctor. Or maybe how do you find your son-in-law? So you will take due care. You will ask so many people. So the same way you should find an advisor. First of all, the certification is important. That you should have a certification. But you would definitely, if you are willing, you will take due care and you will know how to find a good advisor. Like you find a good doctor, or like you find a boy for your girl, or a similar thing. So you will take the due diligence and do that. It is not rocket science. I think that's my simple answer. Ashok, you want to add something?
Yeah, I was just going to say that, when you interact with various people, and you also learn by your own interactions and by mistakes. and then you find that yes, who is good and who is really good, and then you stick with them. And of course, just like any portfolio, you keep evaluating, what kind of advices are coming and how up to date the financial planner himself or herself is, and that's where it gets kicked in. And so I think, Arun, you had actually said the way it is to be said.
Yeah. Yes, Tina.
Thank you both.
Yeah.
I have two different questions, but we'll talk about the trends in next coming 10 years. And so I will club both of them. So what are your views regarding the stock markets for 10 years down the line? And someone also talks about thoughts on USD and its impact on the global trades in next 10 years.
So let's leave it to the expert. Arun is expert on stocks, so let Arun talk about it.
Yeah, let me answer the stock question and the other question. I think Ashok can take. So stock market, I have a very simple rule that people would say, when should they invest? And they said, if 10 years back I would have invested, I would have got so much. So I always say the next best moment is now, if you have money. Because as an Indian, we are not invested in equity to that extent the global investor is doing. Still, I think 3 to 5% of our population gets into the stock. So the way India looks now, the way we are growing, we are the fastest growing country. We are doing so many good things. We have a stable government. So obviously, we are going to do very well. And one has to be very, very careful that you have to beat inflation. And if you have to beat inflation, you have to get into stock markets. So if India is doing well, and if we have to grow, if there are only 30 cars per thousand today, and maybe in US it is some 200 cars, and China maybe 80 cars. So we are going to go there. If we are going to grow, then obviously the stock markets also would grow, because these are the companies who would be manufacturing these things. So over a period of time, and you won't go wrong if you are investing for 10 years. If you are investing for 1 year, there are chances. So one research says that in 1 year, there are chances of around 70% chances of that it may or may not give you the desired return, or there may be a negative return. But after 3 years, it comes to around 25% of the time you may lose money. But after 5 or 6 years or 10 years, you don't lose money. And the way you want to invest is whatever route you take, you want to get into direct stocks. If you know stocks, if you don't know stock, get into mutual fund. If you don't want to incur some cost, get into ETF. But you can't ignore equity. And over a 10-year period, and if you have seen right, last 40 years, it has gone up. The trajectory is upwards. It would come down, it would go up, but the trajectory is upward. And now we look even better poised for a growth period. So next 10 years are going to be great for equity, and we can see that the way the kind of money we are getting in mutual funds, the $2 billion worth of SIPs every month. I think that's great. So we have realized there are some 14, 15 crore demat accounts, which is basically last 3 years, it has gone up by 3 times. So I think we have understood that, and this whole campaign of mutual funds, the awareness, I think things are changing and it is easier to invest. And I personally feel that 10 years are going to be great for stock markets. But yeah, invest as per your goals, maybe something for 3 years. And if you want money after 3 years, after 2 years, you shift it to a debt fund so that you can get the money when you need it. I think that's my take on the stock markets. Ashok.
Yeah, Arun, I think I agree with you, and probably it's always good to agree with the expert on particularly stocks.
You are
And
also expert, Ashok.
so this question about US dollar yields and all. So let me just tell you, it's a simple thing. So US dollar yields, whenever they go up, the dollar flow happens towards US. So we will be able to link with everything. And once the yields start going down, and then people move to other markets where they want to get higher returns. So that leads to the flow of funds. It's in a simple way I have tried to explain. And with the kind of inflation right now, numbers which are coming in, even though some trajectory has been given that interest rates will come down. So let's stick with the what Fed has given the trajectory. So hopefully interest rates will see some easing. But please understand that inflation is something which all central governments or all central banks are really concerned about, and then they take due steps. And with the US inflation, when it comes in, then it actually affects everyone, in the sense like the rate of interest in US dollar starts going up, and then suddenly you find that the money, in fact, starts moving out of your economies to US. And that's where you sometimes. But in India, I think there is a trend reversal now with the kind of SIPs which are there, and even it is going to the tier 2, tier 3, tier 4 towns also. So the Indian investor is now getting into that space, which is sometimes exited by the global investor, and when they take their money out. So I'm not getting into too much of this, but I thought I'd just give this much answer to this particular question.
Thank you so much, both. With that, a new question pops up in the chat, and it talks about NPS, whether it is a good source for retirement income in terms of the returns, or they're better source for such post-retirement incomes. Over to you.
So there are earlier, what was happening, many of the government, still government, and many of the public sector enterprises and companies, they will have a pension plan, and they will tell, so the way you will look at your whole financial package is that you get your pay, and then you get your provident fund return, and then you get your gratuity, and then of course you look at pension. That's where it is. And over a period of time, this whole NPS thing came in, where uh, there are asset managers who are actually managing your funds there in that NPS. But I think that's a great thing. And so everybody should look at NPS also as one of the options for their well-being in their after years. I mean, when they are not actively earning. Uh, and you have your own options. You can have a discussion with the people who are managing it, and you can tell what allocation should be there in the equity, what allocation should be there in debt. You can also switch in and switch out. All those options are there. But so you can be very passive about it, but I would encourage at least keep reviewing your NPS portfolio, and be a little bit more active, and keep in having interaction with your advisors, that at what point of time you should allocate more to the stock or more to the debt. Of course, when the interest rates are high, today they are at almost the peak. It's good time to. I don't want to give any advice on, but you can talk to your planner and start looking at it. But NPS is a good option. I would encourage people to go for it, unless they want to have their own sort of planning, where they are comfortable and confident that they will be able to manage their own things. But it's always good to trust a professional to do some of the activities for your finances.
Thank you so much. That makes sense. And thank you for the honest opinion. Since we are already talking about the retirement, there is a question around estate planning. Arun, maybe you quickly would want to know your views on planning related estate management.
Estate management, succession planning, you're
Succession planning, yes.
Yeah, so I think it's an important piece in overall financial plan. So because now if I take my own example, if I look at my friends of my age, and so all of us have built up certain assets, and now the thought is that how to pass it on. And in earlier days, people used to avoid this topic, whether you have to get into a will, or you can set up a trust, and what kind of trusts are available. But now it is possible. There are a lot of planners available, lot of options available. You can just write an online will if you want, and if you want to get into some more detail, you can hire a lawyer, a state lawyer, and people like us who have a kid abroad, and maybe there are different tax laws and there are inheritance laws. So maybe sometime it is better to look at different kind of a trust which may be tax efficient, and maybe once you are not there, somebody would take care of your assets, and as per your wishes, you can dispose of your assets. So I think it's an important piece, and people are now getting wealthier, and over a period of time, this requirement would be there. But yeah, this particular point is not discussed much, but it is very, very important. And because when I talk to my friends, most of them are still thinking of toying with the idea of doing a will or looking at a trust. Yeah, it is very important, and people should talk about it. and do the right thing. Maybe if they can't do everything just right away, at least. Yeah.
Thank you so much, Arun. And this is the next question is a slightly interesting one. Please throw some light on inclusion of India into the global bond index. What effects would it have?
No, I mean, this has been long overdue. I mean, it should have happened long time back, and good that it's happening now. So you will see a lot of money coming in and investing, rightly so, because India is the story for future, and uh, probably, and we need to have globally, the bond investment is a sizable investment, and these also help economy to grow. So I think this is long overdue, and we will see now a lot of funds and even the various pension funds and global hedge funds and all. They will be having allocation towards India and investing in the Indian bonds, both for the government as well as for the corporate. So it will also open up space for more money available, and that money will get channelized towards investment in India, rightly so. And that's where it is poised to be.
Thank you so much. That answers the question from Chandrasekhar. Manish wants to know your thoughts on inflation and how it should be considered while financial planning.
I think we have talked about this, and you must try to have an investment which actually beats the inflation, because if you have an investment which is inflation, I mean, whatever you are earning minus tax, it's lower than inflation, then probably it's not going to help you in the long run. But sometimes, of course, you allocate something to the very safe assets that, irrespective of the inflation, at least that much you will get. But inflation is something you everybody must consider, and try to get better returns which are better than inflation. Otherwise, certainly you will see the value of your wealth getting eroded. So, of course, it is to be taken into account.
Thanks. We have been pouring up with questions, but considering the time, I guess we'll have a few more. This one's my favorite, and I would also want to know the answer. And this is to you, Ashok, that you did various responsible roles in different verticals. And how did you upgrade yourself in knowledge and skills? And what is the key to your success? If you could just mention a few of them.
I don't know about the success part, but yes, key to the journey, let me tell you. Definitely, it has been that you have to remain open. You have to be willing to accept challenges. Don't be so comfortable in wherever you are and whatever you are doing. Willing to look at entirely different areas and work. And of course, build your network, learn from your peers, learn from your bosses, learn from your subordinates. It's in today's age. I mean, we do learn from our subordinates. They are much more smarter, tech savvier, and so keep learning. I mean, that's the only thing which I say. It's easier said than done, but it's very important. And with today's amazing interactions on your phone and iPad and all, it is still important that you have time to keep learning, and it's not the pitch for Arun's book, that Yogi on the Dalal Street. So have some time for your own well-being. It's extremely important. So do yoga, do exercises, do some meditation, so that you get a calmer mind. Because if your mind gets zig 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 zig, zig, it's continuously on the run, you will not be able to devote much time to uh, your own well-being. Forget about the well-being of the job or the company you are in. So it's extremely important to take care of yourself, and keep an open mind. Uh, devote some time to everything, and that's anything new which comes in. Do read. And frankly, let me add you. Now I am not reading as much I should be reading, and as much I have read in my earlier phase. But the kind of audience which you have, you all are in that phase which you must learn a lot. You must read a lot. You must interact. Get into various discussions. Join various forum. Get into debates, the habit of speaking, habit of public speaking, so that you are able to articulate what you have learned. These things are extremely important. They get noticed, and but we can have a separate session on that, certainly.
Point well taken, Ashok, and we certainly would bother you basis your availability on the next session on that. A few more questions around how can I do compile asset allocation and how to find a market cap in a portfolio. Or maybe Arun, you would want to throw a light on that?
Just come back again.
So it talks about how can I compile assets allocation? Are there any rules for that? And also how to find a market cap in a portfolio.
Okay, so these are two different pieces, but anyway, asset allocation first. And again, as I think Ashok also mentioned, that first I think we should know our goals. Depending on our goals, depending on our requirement, we have to do the asset allocation. And we spoke about inflation. So I think the major portion of the portfolio in today's time has to go to equity, because if you look at last 40 years or 45 years, the equity has beaten other asset classes. It has given you the real return, provided you have not made big mistakes. So if you have gone through the proper route and maybe getting a basket of stocks, then over a period of time you have made money because trajectory is upward. So if major part, maybe 60-65% is in equity, and then you can differentiate something, maybe put in the bond side or the fixed income side. Or nowadays what we have is a balanced advantage fund where part of money goes into debt to take care of your portfolio. The remaining gets into equity and maybe little bit of gold, as Ashok suggested, 5 to 10%. And if you want to get into the real estate, better take the REITs route instead of, unless you are buying it for your own personal use. And getting into the market cap, so that is basically the stock market. The top 100 companies are large cap. So there are different funds which invest into large caps or which invest into mid cap and small cap. So normally, if you look at large cap, mostly people now take index or ETF route, because sometimes now it is becoming difficult, and globally also there is a lot of interest getting into the ETFs. But yeah, to each his own. If somebody wants to get into the active money management, maybe you like some fund manager or you like their style, then get into the mutual fund route. And this is how you should plan. And again, you should have a little bit of money in large cap, then mid cap, then small cap, or get into a flexi cap kind of a fund. And maybe if you want to get into get a piece of international equity, then also there are some funds by a few mutual funds here, which gets into Nasdaq investment, or you want to directly invest in US stocks, then open an account with the broking, but that is for the experts. So this is how I think you should plan your journey. But yeah, major part is in equity. That is what I would advise.
Thank you so much, Arun. And considering the time, one last question to you again. It talks about if one has to practice fee-only financial planning, what is the scope of this in open future? I kind of really wanted to ask this question, despite the time constraint. But taking the last question, what lies ahead for financial planners in India from practice perspective?
Thanks, Tina. That's a great question. And this question gets asked everywhere. And personally, I would love that situation where there are fee-only planners, because that takes the bias out of the financial planner. Because sometimes the pressure, the situation when you are doing commission-based product advising, you sometimes get advising into some specific assets, because sometimes there are different offers. So personally, and now I see lot of fee only advisor which are doing great work and they're getting good business. So if you can talk about it, the people who are successful, and we know some of those are there, I think that would help. Personally, I would love a fee only planner, because he will definitely get into my interest areas and my requirement and my needs, and accordingly advise a portfolio. So my vote is for a fee only advisor. Thank you.
Thank you so much, Arun. And with that, it's a wrap. Thank you, Ashok and Arun, for taking out time of your busy schedules for today's session and your valuable insights and contributions. Thank you to all our attendees for joining us today. Your active participation and interesting questions have made this webinar truly engaging and insightful. We hope you found today's discussion enlightening and that you are leaving with valuable insights to enhance your own personal money management journey. On behalf of FPSB India team, I would like to extend our sincere gratitude to everyone who made this webinar possible, including our guests, attendees, and most importantly, the organizing team. Thank you to our CEO, Krishnan Mishra, for your exceptional guidance and support. Thank you, Sania and Sajju, for organizing this. And thank you each and every team member for your continued support. That concludes today's session. Wishing you all continued success on your financial journey, and we look forward to welcoming you to our future webinars. Have a good evening, everyone.
Thank you very much.
Thank you. Thank you
Thank
very
you.
much.